turn myself on. Okay, good afternoon. My name is Koromone Koroye. I work with TechCabal. TechCabal is a Pan-African media publication, and we are here by special invitation of Andrew and Africa Tech Summit. So thank you everyone for joining us. We have a great panel today, and I'm going to have each of them introduce themselves and just say a little bit about what they do, and then we'll jump right into the conversation. So Megha first.
Hi everyone, I'm Megha from CDC, the UK's development finance institution, and we invest taxpayer money across Africa and South Asia with the dual goal of making a financial return whilst also driving development impact. Personally, I currently sit in the venture capital team. My background at CDC was food and agriculture, private equity as well, so absolutely excited for this topic today.
Thank you, Megha. Caine?
Yeah, thank you. Good afternoon, everyone. My name is Caine Wanjau, currently the CTO at Twiga Foods. So at Twiga, our purpose is to supply the best quality food at the lowest price, and technology is a key component of that. So looking forward to the discussion and contributing to the conversation. Thank you.
Thank you, Caine. Angelo?
Hello everybody, my name is Angelo Kalaw, visiting all the way from Manila, Philippines. I'm part of Celo Foundation. We're a layer 1 mobile first blockchain, and we're on a mission to build a financial system that creates conditions for prosperity for everyone. At the foundation, I lead global pilots to catalyze wider adoption of the blockchain, and happy to join this conversation and discuss the nexus of financial inclusion and food security.
Thank you. Robert?
Of course. Hey everyone, my name is Robert Greenfield. I'm CEO of Emerging Impact. We're a DeFi-based neobank built for the Global South, mainly focused on providing financial services through NGOs and other fintechs by facilitating humanitarian aid programming and microfinance programming.
Okay, thank you so much. Okay, so let's jump right in. We're talking about food security and sustainability, right? So I want to start with Caine, because obviously because I'm a company, Twiga Foods, and I want you to tell us a little bit about some of the global issues we're facing when it comes to food, and then can you narrow that down specifically to what the continent is facing?
Sure, thanks. So when it comes to food, I think you first have to unpack all the elements that go into food security and food cost actually. So of course there's the produce or the quality thereof and how that's produced and brought to market. And then there's the whole piece around the supply chain and the logistics of getting it to market. And then of course ensuring food safety and food traceability. So all those are different elements of what I would call food sustainability. So when it comes to the primary agriculture side, some of the things we've seen even at Twiga is if you don't take a long-term view, you'll always be dealing in cycles where you have either good yields or good harvests, and then the next season the case is different. And this is usually tied to how long-term one is willing to think about it. So if you're a farmer or you're the primary entity producing the food, are you willing to make the investments that will guarantee long-term success? So with the changing climatic conditions, of course, you're always exposed to changes in weather and all the other elements that are affecting food quality today. Once you overcome that step, it's then asking yourself, okay, what's the most efficient and cheapest way to get this to the end consumer? Historically, there have been 6, 7, 8 intermediaries between the farmer and the vendor. So you have your broker at local level who then sells to a bigger broker, who sells to a transporter, takes it to an urban area, and then the process repeats itself in reverse to the vendor. Now, all those intermediaries, unfortunately, are only thinking about their specific part of the value chain. So if no one is looking at this end to end, then there's always the losses, the risks associated, and essentially all inefficiencies such a transaction would entail. So what you tend to find is, by the time food gets to the market, you're talking of 30, 40, 50% losses. I've heard of statistics where in some parts of West Africa, 80% of produce is lost due to inefficient logistics and all the intermediaries in the value chain. And then When it now gets to the consumer, then there's the issue of traceability and quality. How has the produce been handled from farm? Do people take proper care of it? And that also now contributes to food quality and food sustainability. So I think the way I look at it is the opportunity, which is of course there to address the challenges. If you're willing to unpack that and say how to address these distinct issues, or even look at it holistically and say, I'm looking through this and I want to solve it end to end, then you have a very good chance of then enabling and bettering food sustainability. Technology now comes in to give you efficiency and scale and traceability. But it's not something that you can easily say, let me solve one part of it. You need to look at it end to end and think of the whole problem as a single outcome. Yeah.
So you highlighted a couple of things when it comes
Yeah.
to challenges, right?
Yeah.
Logistics, how the food is handled, right? And I kind of want to understand the role that impact funds or venture funds can play in funding or backing specifically businesses or startups that are devoted to improving what you've just spoken about. So I'd like you to share some thoughts, and then I'd like Robert to also share some thoughts as well.
Sure. So when it comes to the funding or supporting, I think you need a mix of both long-term patient capital, but also capital that's willing to take risks. When I talk of long-term, a lot of those issues, especially around primary agriculture, it needs investment in capex, machinery, equipment, and just making sure that long-term, a farm or somewhere you produce food can essentially meet its requirements. Of course, in the funding environment, most of us are used to its high growth, high returns kind of approach. But there's an element of patient and sustainable capital needed, and has to be thought of as something that needs to be done over several funding cycles. So you're more your traditional finance. But tied to that is also another element where you now need to look at which players are now bringing in innovative solutions. Of course, high risk, high reward. That's where a lot of the attention tends to be, and I think just based on the current environment, there's a lot of opportunity from a funding perspective to put funds from that angle. But I think what's also good would be to have an element of patient long-term capital that's willing to make these long-term investments, because sustainability at the end of the day is thinking about how does this work for as long as possible. So it's long-term capital that's also needed in that sense.
So it's very future-minded as opposed to what can be gained right now. So investors kind of have to think that when it comes to food and funding food businesses in Africa, you're playing the long game essentially.
Correct.
Robert, what are your thoughts?
Yeah, no, absolutely. And I think, from the other side of financing, and this touches a bit on what you spoke to as well, is the financing available to the farmers themselves, right? So you have startup financing with the expectation of, a long-term investment, not expecting immediate traction within, even the first year, so that they can understand how to deploy, particularly technology in rural areas, which is very difficult, right? You're dealing with intermittent internet access, you're dealing with, lower digital and financial literacy that you need to improve in order to reach the reward, right, that you want to get to as a social enterprise. But then on the smallholder farmer financing side, it's understanding that you have to change the terms of, loans to farmers altogether. The expectation now, and this is both true for urban-centered MFIs, but also, larger traditional banks, is that you're going to have the same terms that you would normally have for, other financing projects like mortgages and other things, where it's normal to expect payment in 30 days, or it's normal to set a particularly high interest rate. But some of these things, the lack of flexibility in financing are some of the things that are actually preventing smallholder farmers not only from increasing their productivity yields because of this additional, stress, right, of coming to harvest and earning income, but it also causes a lot of issues in terms of access. And so, right now, we're focused on, how do you provide financing outside of what's traditionally available and scale it, particularly in rural areas. And that's by, one, providing things that are more flexible, so based off of the seasonality and revenue that smallholder farmers actually have. So that's not 30 days, it's probably 60 to 90 days plus. and also, leaning on social reputation systems to prevent default rather than, almost being a bit exploitative in terms of the collateral that you require to access those loans. And so this means, how can you, leverage models that already exist, like group lending, leverage asset-based lending or store credit-based lending, and also, to the earlier point made, how can you lean on other partners throughout the agri-value chain to provide such financing? So a perfect example is providing financing through, agro-input dealers rather than MFIs or NGOs. And so I think this provides, a huge, opportunity not only within Africa, but if you can solve that in the rural regions, particularly the Morocco region in Tanzania or other regions that are less developed, I think, from a technology perspective than Kenya or Nigeria, it actually scales very, very well to other regions like Southeast Asia and LATAM that are suffering similar problems.
So essentially, we can build models that can be replicated in other regions as well that have similar challenges. So you talked about technology, and we know that Africa is currently going through its own, I would say, digital and technology revolution. What roles do science and technology play when it comes to food sustainability and food security? Specifically, I want to hear Angelo talk about blockchain and how blockchain technology can help. And Megha, I want you to just come from the perspective of the science behind it. Yeah, so Angelo, let's start with you.
Yeah, sure. I think a common thread that Caine and Robbie speaking about is just like this access to finance that really is affecting food security. And of course, through blockchain technology, our perspective is like we can innovate on financial products and services, not just in terms of increasing productivity of farmers, but also offering financial products and services for their own well-being, right? Like these are consumers. They need to send their children to school. They need some protection from shocks. And our thinking is through blockchain, we're able to offer decentralized finance, basically like lower down a lot of costs in terms of like traditional intermediaries that we have in the financial system. So right now, even in the Celo ecosystem, we have lending protocols that are able to offer more affordable forms of credit, lower costs that will, of course, be beneficial to the farmers. Aside from that, like the distributed ledger technology allows us to increase the transparency, let's say, of humanitarian assistance, right? Like we have a lot of organizations that provide assistance to these farmers, but oftentimes the inefficiency there is like by the time that it reaches the wallets or like the hands of our farmers, a lot of the value is erased. But then through blockchain technology, we're able to like bring down the costs and like directly transfer it. Robbie had a really good pilot with emerging impact in northern Kenya. Even to traditional communities, we can provide this access. And of course, like there's a lot of innovation in this space, right? Our thinking is this type of digital innovation, digital money, can create new products, micro-insurance, as well as like digital identity, creating like a credit history that will allow them to access affordable credit, even in their context.
Thank you, Angelo. Megha?
Yeah, I think our starting point is always, you have to remember that you're working in a smallholder context. And so making sure your technology is designed to reflect the realities of that context is key. And sometimes you get the ordering of business models all wrong, where you're starting with the tech rather than the people. And so, our mindset is people, processes, tech when you're thinking about building something out. And the farmer is a business. They are smart, and so ultimately, as an investor and as ag-tech startups that we look at, you have to be thinking about the farmer P&L, the farmer working capital cycle, to Robert's point, and saying how can we plug the gaps there? What are the problems? If we're saying this is the right input to use and this is the time, that is completely redundant advice if the farmer doesn't have the cash to actually purchase those inputs at that point in time. So farmer financing models that actually match up repayment deadlines and tenors to the harvest cycles are incredibly powerful. There you're saying we understand you as a farmer, we understand your business, and we understand how you make money, and we're going to plug ourselves exactly where you need us. And looking at the entire value chain, trying to solve one problem in isolation, we find, yes, plugs a gap, but ultimately you do have to be a one-stop shop for the farmer and provide a bundled offering, starting with the people side of things, which is let's build trust. And lots of times, going back to Caine's model, off-taking from the farmer is a fantastic way of saying, you can trust us, we give you access to market. And then you layer on advice, inputs, and critically financing to make sure that the farmer has a single bundle coming from you as a problem solver.
It sounds like this process requires a lot of partnerships, meaning that one person or one organization can't do it alone, right? So in your own experience, what would you say, so we have, let's say we have like a founder like Caine, and then we have a fund coming in to say we want to help you with this, right? So there's, for example, the ABC fund. We want to come and help you with this, want to be able to disperse these funds to these farmers, right? Who else would you say needs to be included in that conversation?
I think absolutely spot on in terms of this is not a one startup, one investor game. This is a wider ecosystem shift that we're all collectively trying to drive. And so we have to be efficient, which means leveraging existing relationships, leveraging existing infrastructure. So saying, going back to Robert's example, can we leverage retailers to distribute financing for us to the end farmer? Rather than building our own shops and touch points, because breaking into the rural economy is not straightforward. It requires those relationships, and those relationships exist. So how can we make them more efficient? And then financing at the startup level as well, right? If you're a startup lending to farmers, you really don't want to be eating into equity. And so you, as a business yourself, want to be securing debt in some shape or form. CDC has the privileged mandate of having cross-learnings across Africa and South Asia, and it's very interesting to see how farmer financing in India looks, where the ecosystem is in a different place. Banks have regulatory push to serve farmers, and so they're always looking for ways to partner. Farmer financing models that we've seen on the India side don't struggle with this issue of debt. On the Africa side, we have to be creative, and CDC is brainstorming how we can provide, obviously in addition to the equity that we do on venture capital, debt products as well that can help mobilize the market and help educate local banks to say, this is why the credit risk stacks up, and this is how you can potentially create a partnership with an agtech startup.
I'm actually glad you kind of compared what's happening in India versus, I guess, some specific countries in Africa where farmers are being attended to and there are people genuinely pushing to see that they're being empowered, right? So my next question is about the role governmental agencies or local financial institutions can play, right, in ensuring that farmers have access to funds or loans or whatever it is that they need to actually take their business to the next level. So, Caine, I'd like to start with you, just in your own experience building Twiga and where Twiga is now. And Twiga is B2B, right? So you're dealing directly with retailers and vendors, right? What role would you say, specifically in Africa, do governmental agencies and financial institutions play in ensuring that we are empowering farmers and people who work on farms as well?
Sure, thanks. So a couple of things. One is from a policy standpoint, given a lot of, at least in Kenya's case specifically, the economy is still agriculture dominated. Services is speaking, but it's still an agriculture-based economy. There's still a lot of attention and effort given on the agriculture side. From a policy standpoint, agriculture extension services, the regulatory framework around how farmers get offtake and selling services through development, they're called development agencies here, but essentially they'll take your produce and market it for internationally. That's something that's getting and continues to get a lot of government attention. So policy support side is doing well. Now the only thing that has happened over time is that is specific to cash crops or crops that will earn government export revenue. Those are usually more for local consumption, don't get as much attention for various reasons. So what you find is from a policy and support standpoint, it's not as involved as those or those that generate foreign currency for the government. So that's one area I think that I've noticed a difference. On the selling side, on the retail side, most governments have taken the approach that we should never tax food, which of course is great. I think it will be also socially insensitive to start taxing food. So what you tend to find is the support government tends to give is more on the infrastructure level. So markets, roads, just making sure that there's an access to market for some of these produce is some of the things we've seen from a government standpoint. What you're seeing though now is there's a realization that by marrying agriculture policy and technology policy, there could be an opportunity for innovation. So governments are starting to talk more about things like traceability, want to understand where food is coming from, where it's going, the quality of the food. So there's a lot more attention in that space. And I think the other area that's getting more attention, at least from a government support standpoint, is ensuring that sustainable agriculture practices take place. So historically, there's never been pressure on land, but with growing populations, for example, governments have started to take a more proactive approach around, okay, where should you plant, where should certain agricultural activities happen, because there's, of course, the population grows and there's pressure on land. You also don't find yourself where you're not generating enough food to feed the local population. So those are some of the areas, at least I've seen high level, that have gotten more attention in recent years.
Yeah, so policy is very important to ensuring that not only are the farmers secure, but the people they're serving as well. Yeah. So I want to bring the conversation back to technology, and this is for Angelo and Robert, right? So obviously blockchain technology is a buzzy word, right? And a lot of people, I feel like, still don't fully grasp what it means, right? So I want you guys to first, just from your own perspective, talk about your understanding of it, and then talk to us about the role education plays in ensuring that the people that you're trying to pass this message across to, or tell them that building with this technology makes sense. Where does education fit in? Because they need to understand on a fundamental level how blockchain technology can help them, right? So this is more than just a startup founder saying, I want to build a blockchain technology. It is for the farmers as well to understand what that means. So yeah, I'd like to hear from the both of you.
Yeah, I mean, certainly Angelo probably has amazing insights as well on this. I can certainly talk to part of it. So I think the biggest thing, and this is, for any VCs in the room, a perfect way to figure out startups not to work with is that from an interface perspective, blockchain should be non-existent, right? It shouldn't be something that someone has to struggle with to understand, to be able to use. And unfortunately, and you see this a lot in the West, blockchain, as a buzzword, to your point, or cryptocurrencies as a buzzword, you see that in the interface, and it's a very difficult technology to use and almost nearly impossible in a rural context. And this is where I think it's incredibly important to invest in companies that are focused on, leveraging USSD as an interface or NFC cards as an interface, right? People look at USSD and they think, oh, it's outdated, but they don't understand that
it's actually really powerful.
Incredibly powerful. Yeah. I mean, you're talking about something that, a technology company can even pay for the airtime that would go toward accessing, that interface in the first place. It's incredibly familiar and it's very minimalistic. So it forces the technology provider to, really minimize what they're providing in an understandable and simple way, and avoid, any, elements of confusion that might come with an iOS application or an Android application where you have infinite opportunity to confuse people. I think that's the first thing in terms of the building and making sure that the interface is something that's familiar to avoid, unnecessary education. I think in the context of, financial services, DeFi, to Angelo's point, is making sure that you are providing financial services paired with financial training. So in the models that we're looking at, we're leaning on, either major NGOs or local rural NGOs to provide financial training as a requirement to access. But if you're going to make that a requirement to access, you actually have to make sure that it's locally available. And one thing that's really, really important is when you provide such training, it shouldn't just be, how do you pay us back, right? Which is usually a lot of the training is focused on. It should also be paired with how can you increase your yields based off of the inputs that you're building that are locally available to you. And setting the expectation that we really want you to succeed, right? That should be the expectation. The expectation should be increased yield and increased, hopefully, prices in terms of the quality of food that's being produced, rather than just being focused on repayment. And then the last thing that I would say is that, and I think you mentioned this earlier, is that it's very important to then find opportunities to bundle other services aside that financing to provide more social protection. And so this is things like savings, this is things like crop insurance that wouldn't initially be provided in order to increase productivity yield, but could greatly decrease a smallholder farmer's reliance on constantly needing to produce more and more and more, and give them opportunity to take those learnings, implement them over multiple seasons, and become more financially secure in the process.
Yeah, I resonate with the points that Robbie raised, and I think the way we think about blockchain, and I guess this is what Megha was mentioning a while ago as well, it's like it's technology, right? But then it should be the problem that should drive the solution rather than the other way around. And I think, the buzz is like, ooh, let's try blockchain, but as a foundation, our mission is financial inclusion, for example, and so like, if there are problems that are solvable by present tools right now without going through the complexity of blockchain, so be it. And I think it's very important because at the end of the day, our goal is to raise the well-being or improve the well-being of our stakeholders. So yeah, I think it's very important. Like in the projects and pilots that we do, we kind of like understand first the context and like the landscape, and really identify, is blockchain something that will add value to this rather than just forcing blockchain out there. And this is the part where education is very important. My own experiences in the field, at the end of the day, the main product that we have on the blockchain right now is cryptocurrency, right? And it's a form of digital cash. We might not have problems, let's say here in Kenya, because everyone is familiar with M-Pesa, something like that. But at the end of the day, money is underpinned by trust. And so, and my experience is, if trust is very fragile, and so like, if they don't trust this technology, if they don't trust this currency, and as much as you could say that it can unlock value for them, they won't trust it. And the way that I saw how trust is kind of like safeguarded is, one, the product should work. If you say you're going to give them accessible credit on the blockchain, it should work. They should get the money. They should be able to, let's say, off-ramp it on a fiat, in fiat. Number two, it should fit into their needs, right? Again, like instead of like the solution driving the problem, should be the other way around. And thirdly, I believe, or like what we saw in the pilots is that it should resonate with their culture and their community, right? And so like in educating them or like explaining the technology to them, we leverage, for example, on their elders or like the leaders of the community to explain the technology to them. And that kind of like trust builds on trust, and like it's like a snowball effect that makes a blockchain-based product more acceptable and like trustworthy to them.
And I love the point you made about building trust, because anyone who builds in Africa knows that a lot of African countries have low trust communities, and you have to get them to believe that you are actually serving them as opposed to trying to use them as like a meal ticket or trying to use them to gain attention for your business, right? So I love that point, and I love the point you made about accessibility as well. If you say this is going to be accessible, then it should be accessible, right? I want to come back to a point that Caine made about putting pressure on the land, right? We know that there's global warming, climate issues, right? Can you talk about how this is affecting food security, right? One of the SDG goals is to end hunger, right? Zero hunger. Is that actually possible, given where we are, the state of the world right now, and just how much the climate has changed and how it's even affecting what grows from the ground. So Caine, do you have any thoughts on this?
Yeah, thanks. So I think the way I look at it is, it's how proactive you are around it, because what often tends to happen is you only see the problem or the issue when it's too late. So what I foresee happening is, and this is just a personal point of view, is the issue around how, or rather food, let me call it food technology, but food technology here is how is food grown rather than using technology to distribute food. So what new approaches or methodologies will we have to grow food in the future? I've seen a lot of studies or use cases in Singapore where they have vertical farms, for example, and I think they're trying to get majority of the food grown through that vertical farms in the next 10 or 15 years, if I'm not mistaken. So looking at it from that standpoint is, what are the technology or innovations that are going to make food continue to be grown at scale, but in a way that doesn't need us to allocate or use more land to achieve that objective. So I think from population estimates from the UN will be 9 billion in 2050, if I'm not wrong. So how do you feed 9 billion people? Yeah, so for me, I think the key there would be technology or farming technology, innovation to really address that, and being proactive about it, not waiting until it's too late, because we'll tend to look for short-term solutions rather than looking at it holistically and say what may need a bit of time, but we'll see the benefits for 20, 30, 40 years. Yeah.
That's a really good point. And I mean, you are asking a key question. When the population does grow to that point, by then it would be too late for us to try to come up with solutions. So now is the time where we're supposed to actually be building those solutions to protect the generations that are coming after us, right? So around the role the CDC plays, right, I just want to talk briefly about where food security comes, especially when we're dealing with the advent of sort of new diseases. So speaking specifically to COVID-19, right, like while we're in the middle of it, I know that a lot of it was on, a lot of the how to deal with this virus had to deal with like taking drugs and then eventually the vaccine, right? But what role does food play actually in, I guess, curbing the advent of certain diseases, or pushing back, or even terminating it completely? You know, what are your thoughts on that?
So I think COVID, going back to the policy discussion, COVID led to some very interesting changes, and I'm bringing the South Asia perspective again, in India, where the government said, right, we have to be very internally focused, we have to produce our own food. How do we optimize that? One is obviously the on-farm stuff, right? To Caine's point, we have this amount of land and we've got to optimize how much we get out of that piece of land, whilst also not destroying the soil. So we don't want to use too much of inputs or the wrong inputs, but we have to optimize with what we have in terms of the land. Then you have the piece of post-harvest. Again, going back to Caine's point, the food loss numbers are scary if you think about the post-harvest loss, where it can go up to 30% plus. And technologies that focus on that piece of the value chain can bring it down to 3%. And so over COVID, the government in India was thinking through policy, and they massively deregulated a number of things that meant that food was moving more efficiently across the country. It was obviously being grown in very specific places, but it was moving to the right places so that the farmer could secure the right price, the quality was there, and that food loss was prevented. So I think COVID, just kind of taking a step back and answering a different question, has led to some very interesting changes on the policy side. And for CDC, really, we're thinking about both the adaptation and resilience side, which is the on-farm piece, as to how we can make this smallholder more resilient to shocks, whether that's drought-resistant seeds, early detection of disease, and input access at the right time in the right quantity. And then also that second piece around how can we reduce that post-harvest food loss through improved storage, efficient supply chains.
Thank you, Megha. Robert, I have a question about how local and global ventures can partner with the farmers or business owners like Caine in ensuring that African farmers are protected, and even the end consumer as well is protected. Does this look like some global venture capitalists coming into the continent and actually seeing what's available, what's possible, scoping the land? Or does it look like them sending representatives or finding reps in the continent or on the continent or in specific countries and saying, we want to do this, we want to invest money here, go out and get some information, do some research for us? Like, what are some creative ways that, especially global venture funds, how can they partner with people who are locally on the ground?
Yeah, absolutely. Really good question, by the way. Like, I think it starts for foreign investment. When we talk about foreign firms, they need to understand the opportunity in the cultural context, and I still don't think that they understand that. And that's not to say that foreign investors are a monolith. There are some, like, as represented on the stage, that deeply understand it. But I think you see a lot of fintech, supposed fintech venture firms that don't understand it, and that's because the domestic context that they live in doesn't have so-called smallholder farmers, or the smallholder farmers are supported in a completely different way. So, for example, in the United States, there are a lot of federal programs that provide a social floor for farmers, and there's of course a lot of conglomerates that operate in those same regions, right, that effectively have monopolized where outputs go, and so there is not the same disconnect between rural communities and where food is sold. And so I think there's a great deal of education as to what the opportunity is and what the expectation should be when making investment. And you really can only have that if you have representation on the ground. So that means that if you're going to create an Africa fund or an agri-tech fund, as a part of your business, you need to have Africans running those funds. You cannot have only expats leading those teams. It's incredibly important. And that goes for our teams as well, right? You have to have, as a startup, you need to have employees, right, in Tanzania, in Nigeria, in Ghana, in Kenya, wherever you're trying to affect that problem is incredibly important, because that cultural knowledge cannot be researched. I think the second thing, is partnerships. And so, to your earlier point, meeting with the Twiga Foods, also convening with NGO partners as well, and collaboratively setting the vision as to what you want the outcome to be, and also being open to changing your models. You see, companies in the private sector obviously a lot more adaptable to changing their models because it means the existence of their business. But I do think in the social sector and the public sector, you don't see as a fast pace of change. And given the onslaught of increased natural disasters due to climate change, and also pandemics, which are also very much related to climate change, we can no longer wait and hypothesize actions. And so that means that a lot of bigger organizations that typically have the leverage to move business forward need to at least set frameworks in which they work with not only private sector companies, but smaller private sector companies to pilot solutions and see which works at a faster pace. Because to the earlier point made, there isn't that much time, I think, to affect a great deal of change before population growth outpaces food production. And so I think that can be in the form of developing sandboxes that specifically focus on agri-tech and implementing them with certain goals, and having follow-on funding, for applicants that go through that process. I also think it means identifying distributors or purchasers, like bulk purchasers, for particular regions. You see the WFP does a really good job of this, where they literally create insulated systems in which they have a program that's providing financing to smallholder farmers that produce, and they already have the processes are in place, and also the purchases are in place for that particular program. And it does very, very, very well. And in fact, it can become cyclical, because in some food assistance programs where you're talking about refugee communities who are in need of outputs to survive, you can quite literally, source those outputs to them and help them on their journey, which is, wholly different in terms of where they go with it. So those are my initial thoughts on that.
Good points, thank you. Angelo, can you tell us specifically what practical ways we could use blockchain technology to drive agri-tech, right? Are there any specific solutions that could be built on blockchain technology that haven't been explored yet or are currently being explored in your own expert opinion?
Yeah, three comes to mind. The first one is, of course, access to credit at lower cost. Because basically, as I was mentioning a while ago, a lot of these, part of it is the risk profile, right? Lending to agriculture is difficult because of the seasonality. But also a big part of that cost is intermediation costs. So using blockchain technology kind of resolves or tries to lower down these intermediation costs. Let's say even if the funds come from the United States or Europe or other countries, sending them across borders, you don't need to go through complicated infrastructure anymore. And that already lowers down the cost of these financial products and services needed by the farmers, right? The second one is also related to that, and this is live. We have a lot of organizations, humanitarian organizations, that want to send assistance to farmers. And these are cross-border transactions, so it's related to that, blockchain technology enabling us to transfer value across the world without the need for the traditional financial system. There are other applications of distributed ledger technology. Two things I'm excited about is digital identity. It's related to NFTs, which you guys might have heard, the buzz on the crypto and blockchain space right now. But basically thinking about having a permanent record of your identity on the internet, and think about, for example, a refugee who moves from one place to the other might not have an ID to come, but then having a portable way, a digital record, okay, this is this person, this is his or her credit history. If he wants to start in a new country, having that record to present to financial institutions, I think it's groundbreaking. It's changing. So a lot of ways to apply it, a lot of ways to use it. But I think as we speak right now, we're at the frontier of technology, and there are many ways by which innovations can be born.
I love what you said about this idea of this digital ID, this presence that you have that you can sort of take around with you, even if you're displaced, right? Or you've been adversely affected by war or something like that. There's a record online that shows that this is who you were and this is what you did in this country before you had to move. I really love that. Caine, I have a question around, I know that Twiga is B2B, but I want to understand from your perspective, from what you've seen, what are some of the challenges consumers are facing when it comes to food security, right? So you understand it from the business perspective, but what do you understand about consumers are facing? And are you at any point thinking about even addressing some of their needs?
Sure, thanks. So I think the consumer challenges or issues is essentially an extension of what the business we supply faces, that it's just an extra step to get the produce to the consumer. Big one is food quality, food traceability. It's a challenge, and maybe it usually goes unseen, but it's usually a big challenge to understand, is the food I'm eating healthy? Where was it grown? Is it the right type of farm inputs? The right type of even water? Nowadays you hear all sorts of stories of the kind of water that's used to grow food, and it's essentially a question of how safe is my food. I think that's usually the primary challenge people face, and it bears out when you look at the statistics around the reasons people are getting hospitalized, increased rates of issues tied directly to quality or type of food you eat. So the biggest issue I think is food quality, and that's why I think initiatives like traceability come in. Of course, there's always the blockchain approach you could take, but that's usually one way of looking at it. At Twiga, we tend to think of it a bit differently. So when you think about blockchain, if you unpack it, it's really around, can I verify where something is from or the information on the system? But it's also ask yourself, what's the trust network? And if vendors and farmers are depending on Twiga, for example, then Twiga is essentially the trust network and essentially plays a role, a blockchain type solution in place. So it's a question of who or where do you trust in terms of the food and where it's coming from. So traceability and the technology to just ensure food is safe, I think, is one of the biggest consumer pain points. Price is also an issue, but I think price is tied to the larger structural issues around supply chain and how costly or how affordable it is to have food or to pay for food as a consumer. Right now in Kenya, I think 45% of disposable income is spent on food. So, and that's not even the highest. The highest stats in other places on the continent. So it's how do you bring down the overall cost of food. So food affordability is a big issue. And then I think the third one is more to do with things around balanced diets. I know this is not a food science forum, but I think when you talk to consumers, one of the things they always talk about is, am I eating the right types of food to live a healthy and sustainable lifestyle? So when you think about like some of what we do to address some of those issues, ultimately the person who eats or consumes the food is the real person you're targeting with all these initiatives. Because in the B2B space, the vendor is essentially just looking to sell it. So their value add is being close to the customer, knowing the customer, and providing some things at Twiga may not be able to provide like the attention and credit that a local shop owner would give. But ultimately, the person you're solving for is the end consumer. Yeah.
I mean, I love what you said about food affordability, because even in Nigeria, we're going through, we're dealing with inflation. So prices are like way up, and a lot of people are talking about food. You know, the fact that when you go to purchase food now, it's almost twice as much. So you're thinking about people who are earning like less than $1 a day, or maybe between 5 to 10 a day. I mean, what are they eating when you really think about it? And in our experience, we know that sometimes unhealthy food tends to cost less, you know, and what is actually good for you tends to cost more, right? So there's a need to address that area. You know, so thanks for sharing those insights. So Megha, I just want to ask about what key factors we should consider when we're talking about food security and sustainability. So Caine has mentioned affordability, traceability. Are there any other factors that we should be looking out for? I know for me, the climate, is the climate actually conducive enough for us to grow proper food, you know, or even grow new types of foods that the continent may not even be used to, or even feel like we could actually grow this year. So yeah, what kind of factors should we consider?
Yeah, I think this is kind of really all hands on deck. We have to target problems across the value chain, firstly, horizontally across crops. Your point around, you know, can we be more sustainable in replacing soy with some of the new feed alternatives coming up, which mean that you're feeding animals livestock, insect-based feed, not soy, which can then be diverted into human consumption. So I think it's really across the board thinking, what are the problems, you know, and this is different by sector, but there are very common underlying themes that we've talked about today. And also, the disaggregation is not just on the supply side, it's also on the demand side. So going back to this idea of what does the story look like for the end consumer, there's a need to aggregate on that end as well. And we've been seeing very interesting group buying models, actually one in Lagos, which leverages the urban density. So, you know, this idea of people being physically close together, that it makes sense to develop supply chains that are delivering in bulk, and also, you know, being able to buy in bulk means you get a cheaper price overall as that collective community. So I think thinking about aggregation on the smallholder end, because that is not changing anytime soon, as well as, you know, making sure that the supply chain flows seamlessly through, and we're thinking about each and every step, and also finally aggregation on the customer end.
Great. So just before, because we have just about 5 more minutes, so I just want to ask like final thoughts. So Robert, I'll start with you, right? So can you talk a little bit about how your organization specifically is empowering, for example, small business owners or small farmers? If you were going to directly deal with these small groups of people on the continent, how would you go about empowering them using your organization?
Yeah, absolutely. So we primarily focus on digital financial services, and so there are two sides of that. One is obviously providing the interfaces to access finance, so that would be through USSD. The other one is crowdsourcing the capital at a lower cost and providing that capital in a way that's programmable. And so what I mean by that is that typically in the past we've facilitated digital cash assistance programs with major NGOs, and even though that can bring some advantages with regards to remote distribution of capital, more transparency, the issue is that it doesn't scale well in rural regions. And so in the context of smallholder farmers, we're looking to provide effectively a model that any business can use, whether it's an input agro-dealer, whether it's an MFI, whether it's an entity like Certain Foods, to provide customizable financing that can be adapted and accepted on the farmer's terms. And so, to us, that means pairing financial education with local NGOs so that those farmers are more educated about what they're getting into when they accept a loan. But it also means minimizing risk. And so the way that we do that in the input agro-dealer context is providing financing in the form of store credit, and rather than something that you can just straight offer, to M-Pesa or Airtel MTN money. Additionally, we try to align, and this is where the blockchain part comes into play, right? Being able to make financing programmable based off of the needs of the business providing it, and also the borrower is a huge benefit. But we also try to align incentives of organizations like the retailer. So you ask yourself, okay, why would they want to provide financing, right, as an offering in addition to their inputs, and how can you minimize the risks that they face? And so the way that we're thinking about that is that when you source the capital, you typically source the capital from abroad or from retail investors that see their investment more as a savings APY rather than something that's extremely aggressive like an MFI loan. So typically you're going to see interest rates that are around 10 to 15% instead of 19 to 30%. And so that's one way, right, of attending to that. The second thing is that and what I mean by that is that the agro-dealer no longer has to deal with the risk of default, right, because they're not originating the capital. But another way that we're trying to align incentives is enabling the agro-dealer to effectively be able to withdraw immediately that store credit-based revenue based off of the default rates of the farmers that they're lending that store credit to, right? So you might start at a ratio of 50%. You can withdraw 50% of your revenues immediately. And then if you have a really low default rate, and this leans on social reputation, right? Because, agro-dealers, they know their farmers in their own localities. You can increase that withdrawal ratio, right, to 80, 90%. The same goes in the opposite direction to disincentivize providing store credit to any and everybody that might not have been reliable even in informal credit systems, which many agro-dealers already have, right? And this is lending to smallholder farmers just based off of reputation. And you see this a lot with major agro-dealers. And so that's another incentive, is aligning additional revenue streams with your ability to detect in a way that technology can creditworthiness. And then, lastly, I think it's being able to, just sell more inputs where you wouldn't otherwise be able to. And so that additional revenue based off the financing afforded to those smallholder farmers is also another incentive. And I don't want to nerd out because I know we only got limited time, but I think where it gets very interesting is that if you create partnerships with NGOs, you can even create models in which there are automated guarantors to the financing available, which is really, really important because in the initial pilots, you were going to have defaults. But I really don't like the narrative around smallholder farmers defaulting. You oftentimes hear, and this is especially true from Western VCs, they just don't pay back. And that's not true, right?
Thank you for saying that.
No, it's not true. They're focused on financing what's important to them. So in some cases, you might accept a loan and it might be misappropriated, but it's misappropriated to feeding their children, right? Which is a very valid expense. And so they need, models that are flexible to cover default and eventually, digital credit systems that allow them to be able to borrow from far beyond, just within our systems or within our partners. And so that's how emerging impact is attending to it, is providing those initial tools both for the lenders on the ground, be it agro dealers or others, and also the digital wallets that are interoperable with the existing mobile money systems that you typically see in these ecosystems.
I love when you talked about building social reputation and the role NGOs play, even community-based organizations as well can support farmers and ensure that they are putting the money into what they actually need to put the money into, which is bettering their technology or their processes, right? Even though spending the money on what they need isn't necessarily bad, they need people that can guide them and say, okay, this money coming in is for you to do this, and then later this can produce that. So thank you for sharing that. Angelo, any final thoughts from you?
Yeah, I just want to mention our role at the Celo Foundation is to be a catalyst, right? We want to support the wider adoption of blockchain technology, the Celo blockchain, because we have faith and we have the vision that blockchain can be a transformative tool, technology, to kind of like revolutionize the way things do. So at the foundation, we support or we have programs for builders, for innovators who have the brightest idea on how to resolve like the trickiest challenges, in agriculture, in other sectors, to foment financial inclusion. So we see ourselves to play that role of kind of like bridging partnerships, because at the end of the day, I think food security, supporting agriculture is an issue that requires cross-sector collaboration, cross partnerships. That's why, aside from like supporting innovators, builders, we also actively pursue partnerships such as with emerging impact, big NGOs, and ultimately with governments, having that conversation so as to create a space where innovation can flourish, and we can see more products and services that can help us resolve the trickiest issues that we face.
Thank you. Caine?
Yeah, thanks. So for us at Twiga, when we think about our core mission, quality food at the lowest price, it's tightly linked to food security and sustainability. So what we're asking ourselves every day is, how do we look at this long term, where as we scale and grow and serve more vendors, we're doing it in a way that vendors can also rely on us, because at the end of the day, when we think about who we serve and their dependency on us being reliable and being there for them each and every day, it needs us to really take a long-term view and say we need to think of access to food as Twiga and making sure it's coming in a sustainable and reliable way. Also the aspect of traceability for us, very, very important. Even a lot of the work and investments we've done in recent times is really around the issue of traceability. It's coming more to the forefront when you think about the indirect social costs of bad quality food. We want to be thought of someone who really cares about quality and safety of food. So that's a big focus area of us, for us. And then lastly, on the vendor side, it's also making sure that we're giving them solutions that enable them think of how to scale and grow the business. So beyond just providing quality food, it's also making sure we are providing adjacent services that help them scale, like financing, so trade financing, for example, making sure we are building a very efficient logistics network so that we can find them and deliver to them wherever they are. So those are key focus areas for us. And yeah, you will be hearing more from us in the near future.
I'm looking forward to it. And Megha?
I think for us, in thinking about adaptation and resilience, climate change, this is not purely about impact. This is not in isolation. We think it is closely linked to commercial success, both for the farmer and then ultimately investors, well, the startup in between and the investors at the end. So very, very closely linked and not being looked at in isolation, which I think is really important to flag. And I think the ecosystem, the more you lock going to earlier points around how do you make sure that the financing being provided to a farmer is going into income generation, the more you lock end uses, the more you can ensure it's a fully virtuous cycle where the financing you're providing is indeed going into inputs and then coming back around in the form of increased productivity and so on. So I think that bundled approach, which really closes the loop, is something that we're super excited about. And I think more broadly, just really excited to be joining dots, whether that's for us across our two geographies, Africa and South Asia, but also across the ecosystem. The grant funding world is very focused on agtech, but I think we sometimes have this death valley where startups that initially get funded via grants then can't make that jump to private or institutional capital. So I think the more we talk to each other across that spectrum, the better this ecosystem works overall.
Thank you so much. So for me, key takeaways are people, processes, and technology, and most importantly, partnerships. This is what's going to drive our ecosystem forward. Thank you guys for joining us today, and yeah, we're done. Thanks.